be loud, be proud about it, and educate people about it. Allow them to make an educated decision as to whether or not they'd like to invest with you. And when you do that, that's a way that you can raise capital without pressure, without manipulation, and being able to sleep well at night.
Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larby.
Hey guys, welcome back to another episode of Where Should I Invest with Sarah Larby. And today is May 27th and I spent the weekend at OREC 2018, which stands for the Ontario Real Estate Conference, which was happening in London. And I will say that I am a big believer that your net worth is your network. And socializing, speaking with, connecting with other like-minded individuals is so important. So if you guys are out there and you are getting started, the best way to start is to talk to others that have done what you want to do and learn from their mistakes so that you are actually not making the same mistakes and saving some money doing that. So really, it was a lot of fun. I was on a women's panel and I was also actually interviewing for my podcast live at the event. So thanks guys for those of you that organized it, and I am looking forward to next year's event. So just wanted to also give you guys a little bit of update on what's going on. And my cottage rental is actually posted on Airbnb and it is already starting to be rented. A lot of current investors that I know are renting it for the summer. And the weeks that are left, I am posting on Airbnb and some other sites as well. And in terms of my flip that I'm doing with Sarah Eder, the flip's actually going really well. So there was this flip that we purchased in May, and it's been about 2 weeks now. The house has been completely gutted in terms of removing the kitchen. We've removed the flooring, some of the walls, and next week we are starting to put it back together again. And I will say, when I say we, it is not me. I am not a person that's going to swing the hammer. I like to work on a business rather than in my business. And it is my contractor, Mark, and he's just been doing a really awesome job. And Mark is just really managing the project for me, has done a really good job on my cottage, actually. And now I've put him to work on this flip property that I'm doing with Sarah, and it should actually be ready in about a month and a half. And we're looking at just different exit strategies in terms of, are we going to just be selling it and just cashing out, or are we going to be holding it and renting it? So we've got some options. And I think the third option that we were suggesting to one another is, what if we JV'd with somebody and had a partner in the deal with us once it is done and ready to go? So there was a few options that we were looking at for exit strategies. And I think when you guys are buying a property or you're getting started in a flip, just make sure that you have some options of what you're going to do with a property after you're done with it, after the renovations are done. And it is so important to have different options, because you never know when the market is going to turn, or perhaps you're not going to get the pricing that you want at the end. So just keep your options open and you will be okay. Anyways, today I wanted to share my interview that I did with Dave Dubeau. And Dave is a well-known investor in Vancouver, the West Coast, also in Ontario, but lives out in the West Coast. Used to actually live in Costa Rica and moved back. And he originally purchased 18 deals in 18 months. Currently is doing multifamily property, but has dabbled in some rent to own and some other types of investing, and has been very successful. And Dave actually purchases his properties and does his deals without using any of his own money. And he's become very, very, very good at getting other people's money and getting joint venture partners to help with the purchases of the property. So we're going to talk to Dave. And Dave has done some work with SoRight, which is the Southern Ontario Real Estate Investing Training Club. We've partnered together in the past to bring some really great education to the investors in the Southern Ontario area. But for those of you that are not able to attend, I wanted to have him share some of his knowledge and his expertise on this podcast. So really excited to have him on the show today, and let's get on with our interview. Hi, Dave.
Hey, Sarah, how you doing?
Great. How are you?
Absolutely fantastic, and all the better to be here having a chat with you.
Excellent. So Dave and I met a little while back, and we were at the SoRight event, and Dave was an invited guest speaker and also did a boot camp, which was awesome, on how to find money. And so today we're going to be asking Dave lots of questions on the best way to find money, how to find investors, and just understanding a little bit more about Dave's background. So let's get started. So Dave, how did you actually get started in real estate investing?
Well, I kind of grew up around real estate, Sarah. In fact, the family home was actually a sixplex up in northern British Columbia. So it always seemed like it was normal to have tenants all around. And my first actual cash investment was when I was 12, and I invested with my brother and my mother in a duplex that they were building. I put in $200 every dime I'd saved up, and they jokingly said that meant that I got to own the garbage stoop. So that's kind of how I got started, but I didn't really get serious about it until I was actually in my early 30s. After living for quite a while in Latin America, I moved back to Canada with my wife and our two kids, and that's when I really got into real estate investing in 2003.
So I actually have a question. So where were you living before you came back to Canada?
I was living in San Jose, Costa Rica.
That's probably my dream, to live in Costa Rica. What made you come back?
Yeah, everybody asks me that question. Dave, you're living in tropical paradise where everybody wants to move, and then you decide to pack up your family and move to Kamloops, British Columbia, of all places. Why would you do that? And the short answer is, Sarah, that, yeah, Costa Rica is a fantastic country. I love it. Many, many fond memories there. However, as Canadians, we don't always realize how good we have it here in our home and native land. So my ex-wife and myself at that time decided that we wanted to have our children grow up and go to school in Canada. So our oldest child, Amy, was just getting close to kindergarten age at that time. And that's why we decided to pack everything up, start all over again from scratch here in Canada, like hundreds of thousands of new immigrants do every single year. So you got to kind of be away from Canada for a while to appreciate everything that we have here.
Okay, well, thanks for sharing. That's interesting. So you said you started in 2003, and what kind of investing have you done since then?
Yeah, well, my first foray into real estate investing was with creative, low money down, no money down type deals, how to get rich quick in real estate infomercials by American gurus. I bought one of those programs, applied it here in Canada, and actually made it work. I had to Canadianize a lot of it, and not all of it worked right straight out of the box. But initially, I was able to do 18 deals in 18 months with virtually no money in any of those deals. So all kind of creative type things like sandwich leases, getting property owners to give me title to their house for $1, those kind of creative type of deals. So that's what I started out with. I like the idea of low money down, no money down, because that's exactly what I had at that time. Having lived overseas for about 14 years, I came back to Canada with not very much money, no credit. I'd lost any credit rating I had because I'd been gone for so long. And I was starting from scratch, a new city with no contacts and no job. So I had to get kind of creative in order to make a living at real estate. So that's where I got started. I took a few years off and focused on marketing, working for a big kind of Canadian seminar guru guy, helping him market his companies. And then I got back into it in 2010. And at that time, I decided to focus on what's called client first rent to own. So kind of a lease option strategy where we find an ideal tenant buyer, then go house shopping with them, and then together with investors, buy them a house and rent to own it to them over the next 3 or 4 years while we help them get their credit and their financing organized to buy the house from us.
So, Dave, I have a lot of questions. I think the biggest hurdle that I hear a lot is, I can't do this. I don't have enough money. I don't have the funds. And then here you go doing 18 deals in 18 months. Tell us more about that.
Yeah, well, I didn't have much choice. And at that time, to be frank with you, I didn't even understand the concept of using other people's money. So basically, I bought this course, and it was all about how to find motivated sellers who are willing to do kind of creative type deals. It was a good time in my local market here because the real estate market was kind of soft at that time. So there were a lot of people that were more willing to look at creative solutions than in really good times. So that all kind of came together, and that's how I was able to do it. And bottom line, when you've got a wife and 2 kids to support, and they're used to a certain kind of a lifestyle, we had a pretty good lifestyle in Costa Rica, with maids and gardeners and all this kind of stuff. And then coming back to Canada and living in a crappy little townhouse on the wrong side of the tracks, that was a lot of motivation for me to get my butt in gear and figure out how to make a living. So I think, like the old saying goes, when your why is big enough, you'll figure out how.
Great words there. So are you doing multifamily now? Did you switch from rent to own to multifamily?
Yeah, I did. So in about 2013, 2012, 2013, I started doing some deals with my good friend and colleague Ken Beaton, who is very, very experienced in multifamily properties. I thought at that time that I really wanted to focus on that because it just seems like it makes a lot more sense long term than doing rent to own. Rent to own is fine for creating a bit of cash flow and a little bit of income up front, but long term, you have to be doing deals after deals after deals. So I thought, hey, it might be better to get into one deal or 2 deals than hold on to them long term and see the overall, all of the different benefits of real estate investing in the different profit centers. So I partnered up with my good friend Ken. I helped raise the cash. He kind of manages the deals, and it's been a very, very good partnership. In addition to that, my brother and I ended up inheriting that family sixplex up in northern British Columbia, so we got that as part of the portfolio as well.
Okay, so when you say multifamily, how many units is that roughly?
Altogether, I've got 60 units at this point.
Okay, good. So you haven't used your own money for these?
Not a penny. Nope, this is all using other people's money. So once I clued into the power of that I really learned about when I was doing rent-to-own deals. Like many people, I self-financed my first couple of deals, and then I ran out of cash and credit to do more. So that's when I figured out about attracting investors and raising capital.
So who's the first investor that you used? Like, was it a family or a friend, or that you worked with, rather, in terms of them loaning you money? And how did you find them?
Yeah, in fact, my first couple of investors were family members. So my mother was on board, and I had a couple of different cousins on board as investor partners as well, and then worked out from there.
So I want to hear more, obviously, about how to attract money and how you're doing it strategically. Can you walk us through this? I know you do a lot of courses and coaching on this kind of stuff. What are some tips that we should know about?
Well, I'll just briefly kind of tell you my sad story about how I got started raising capital. That'll kind of flesh things out. So when I ran out of cash, when I was getting back into real estate and doing rent-to-own deals, I kind of looked around and saw what the common wisdom was, or the common, so-called common knowledge about raising capital, which is, if you got a really good deal, the money will find you. So that's what I'd heard over and over and over again. I thought, okay, I've got a good deal. In fact, I had one right on the table. The money should magically find me. But then I realized, hey, you got to get the word out. So I'd heard, hey, if you've got a deal, then start dialing for dollars. Start, cold calling people and telling them about your deal. So I tried that. I'd like to say I tried that 40 or 50 times, but to be perfectly frank with you, I probably tried that 4 or 5 times with very unpleasant results. In other words, it didn't go over too well. I didn't raise any capital. Then I'd heard, you got to get out there and you got to network. You got to turn every conversation into a real estate conversation. So I ran around trying to do that at the local Chamber of Commerce, my BNI group, different things like that. And basically, people just kind of looked at me like I was a weirdo. So obviously I wasn't doing that right either. And then I came up with a bright idea. Well, hey, I've got this great deal. Why don't I just email everybody I know about this opportunity? I'm sure somebody will want to jump on board there. So that's exactly what I did. And I was very excited to see some responses coming back quite quickly until I started reading the responses. And all I'd really done is I had succeeded in pissing a lot of people off because I just spammed them about my deal without reconnecting with them on a personal level first. I mean, it was kind of like, hey, it's Dave. Maybe we haven't seen each other or talked for 10 years, but I got a good deal on the go. I need some cash for it. Have you got any? So that didn't go over that well. So bottom line, I had this really, really nice deal all lined up, ready to go. In fact, I had the tenant buyers had given notice where they were renting. We had the property under contract. All I needed to do was, I'd had it inspected and everything. All I needed to do was remove the subjects for financing. And I got an extension, and then that time went by. And bottom line, I lost that deal, had to refund my tenant buyer all of their money back, really caused them a lot of distress because they'd already given notice where they were renting. And all I succeeded in was ticking everybody off and damaging my reputation. And that's when I really realized that that whole idea of, just find a good deal and the money will find you is complete baloney unless you've already dug your well before you're thirsty. And I know I'm using all these terms, but that's exactly what it is. Unless you've already got a group of people who are aware of what you're doing and who are ready to listen to you about your deals when you've got a deal on the go. Does that make sense?
It does, yeah. It must have been really embarrassing as well for you to have to tell the tenants that you're not able to close on their house and now they've got no place to live.
Yeah, well, thanks for reminding me of that whole painful situation. Yeah, it was, it sucked. It was just like one of the worst conversations I've had to have. Justifiably hated my guts. Even giving them their money back wasn't really compensation enough because they had to go to so much time and trouble to either stay. I don't even know where they ended up staying, if they stayed where they're at or they had to find another place. But it was definitely a big gong show, that's for sure.
Right. So then if I wanted to raise money as an example, how would I get started and what would I do and what strategies would I apply?
Yeah, that's a great question. So, Sarah, my philosophy on this, which has developed over the years and after, doing this myself, plus, raising, when I was doing rent-own deals, I raised hundreds of thousands of dollars for that. Since then, I've raised millions of dollars for multifamily properties for my own portfolio. And I've helped my students and my clients literally raise tens and tens of millions of dollars for their deals. So what I've learned over that experience is that I think the best place to start with is what I call your sphere of influence, people that you already have a pre-existing relationship with. A big mistake I see a lot of newbie capital raisers doing is they run out and they just try to raise capital from the general public. And that's very, very difficult, very time consuming, very expensive, and very dangerous because legally you're not supposed to do that. Each province has this thing called their Provincial Security Commission. And unless you are a licensed broker or unless you've spent tens or even hundreds of thousands of dollars creating offering memorandums, you're really not supposed to go out to the general public and raise capital. However, the exception with that is, and again, I have to put a caveat in here, I'm not a lawyer nor an accountant nor part of the Securities Commission. So this is my understanding of how things work. Where you can raise capital is with people that you have a genuine pre-existing relationship with. So it can be friends and family members. It could be co-workers. It can be people that are part of, that through an association or perhaps a real estate club. People that you have this pre-existing relationship with, it's a lot easier to reach those people and a lot safer to do so as well.
Mm-hmm.
So to get started with, what I always recommend people do is they avoid doing the dumb mistakes I did when I lost that deal. So luckily I learned from that experience, and I really try to help people avoid having that kind of painful thing themselves. So the first thing you need to do, Sarah, is you need to come up with that list of prospective investors. So those friends, family, coworkers, past customers, clients, people that are part of association, churches, whatever it is, people that if you bumped into them on the street, you would know them, they would know you, you could have a nice conversation. So my goal for you is to come up with a list of about roughly 200 of those people.
Okay. I was just going to ask you, so why 200?
Well, actually, if you can do more, that's better. But most people get so freaked out at the idea. They say, Dave, I don't know 200 people. There's no way I can come up with a list of 200 people. However, yes, and I think we can attest to this. You attended that little boot camp that I put on.
Mm-hmm.
When you actually export all of the contacts that you have on your cell phone, on your social media accounts, in your email accounts, if you get them all into one place and then kind of go through that list and delete everybody who doesn't fit the criteria of if you bumped into them on the street, you'd know them and they'd know you, you can actually quite easily come up with a list of 200 to 300 people. That's the real trick to it. Instead of trying to think up 200 people that you know, export everybody that you know into one place and then just delete everybody that doesn't fit that criteria. Does that make sense?
Yeah, it does. So LinkedIn, Facebook, your phones, there's probably lots of different places where you can download those contacts.
Yeah, there's apps for that. You can just Google things on how to download your contacts from LinkedIn and from Facebook. It's fairly simple. And then just put them all into a spreadsheet, organize everything alphabetically or however you'd like to do it, and then just go through and delete. And then there you go. Voila, there's your list. And then once you've got that list, the next thing you want to avoid is what I did, which was spamming people and just coming out of the gate with, hey, it's me, I need some money, have you got any? A much better idea is to reconnect with them on a personal level. So I call this a warm-up campaign. And what I suggest, Sarah, is that you do at least 3 communications over about a week and a half, just breaking the ice and reconnecting with people. So what I show my students, my clients to do is to send out a text email to those 200 or 300 people. And you can do this through an email autoresponder type program, something like GetResponse. That way you don't have to send them out individually. You can just program it, create one email and send it out to all 300 people. And it looks like it is personalized. So each person thinks they're getting that individually. And then just catch them up on what you've been up to in your life over the last 3, 4, or 5 years. So I always assume that the other person, I've been out of contact with them for quite a while, and I want to catch them up on what I've been up to for the last 5 years or so. And then at the end of that message, I say, hey, that's what I've been up to. Love to hear how you're doing. Just click reply and let me know how things are going. Love to hear back from you. So then you send out all of those. And when you do that, you're going to be very, very pleasantly surprised with all of the connections that you make, the reconnections that you make with people. And then the idea is that you respond to them. You start a little bit of a conversation that way and really connect on a personal level before you start talking business.
Yeah, that's a great piece of advice, Dave. There's a lot of people that, I mean, you've probably heard of a lot of different MLM types of sales, and they just call you out of the blue. They want to meet you, and then all of a sudden, without asking too many questions, they just want to sell you stuff. So I definitely like your way of doing it better. Just break the ice a little bit and not just come out right then and there and asking them for something. So definitely a better way to do it in my eyes.
Yeah, most definitely. And this is, some of this whole idea comes from the network marketing industry. The whole idea of coming up with that list of 200 or 300 people, that's exactly what all the network marketers are taught to do.
Right.
Now, we're just going about how we reconnect with those people on a different method, on a different way. Because here's the other big thing. Here's the second big mistake I see network marketers making is they get off to a strong start. So they reach out to everybody they know, but like you're saying, most people get kind of ticked off. We've all been approached by MLMers. And then the other thing is we usually never hear back from that person ever again after that.
Yeah.
Right? They're a flash in the pan. They try it once, they don't make their millions within a month, and they're off onto something else. Would you agree with that?
100%. I've seen that many, many times where, I mean, it could be anything, like just all the MLMs. I hear it again over from random people that will come to your house and then they're on to something else literally within a few months from now. I just don't think people, I'm sure some MLMs work, and I know this is not an MLM show, but you really have to do it for a long, long time for it to be successful. And I feel most of the time with those types of sales, people just stop very quickly.
Exactly. So we want to differentiate ourselves from that, because there's a little bit of a concern that we could be looking MLM-y if we just start talking to people about, hey, let's get together. I'd like to show you the opportunity that I've got. I mean, everybody's radar goes crazy when they hear those kind of words, right? So I think it's better to break the ice with this warm-up. So what I suggest, Sarah, is actually a 3-step warm-up sequence. So the first one is we send out that just normal text email, right? So just catching them up on what we've been up to for the last 5 years. Then 4, 5, 6 days later, I like to send out a video email. So in other words, an email with a video in there, or a link to a video in there, where they can click on that and they can actually see you. Now, this is absolutely huge, and this is a real game changer, because next to meeting with somebody face-to-face, there's nothing better than video. So if people can see you, and basically you don't have to come with any new information on the video, you can still kind of catch them up on what you've been up to for the last 3, 4, 5 years. But people get such a kick out of seeing long-lost friends or acquaintances by video. It's very, very powerful. And again, at the end of the video, you say, well, that's what I've been up to for the last 4 or 5 years. Love to hear how you're doing as well. Just click reply to the email that this came out with, and let's get connected. And you'll be very, very surprised, very happily surprised at how many people reply to that message. So that one works like gangbusters.
I think those tips are gold. And I mean, the fact that you're giving it to us already, I'm sure it took you many, many years to get the strategy down. So thank you so much for sharing that. And I do 100% agree, especially these days, that you got to differentiate yourself. And a lot of people do like videos. I mean, how many people watch many YouTube shows or videos one after the other? So definitely is a great differentiator and a great tool to use.
Thank you very much. Now, the real gold is in the third communication, actually, Sarah. So is it okay if I share that with you and your audience?
Yes, please do.
Yeah, so the third communication goes out about 3 or 4 days after the second one. And this is what I call your transition message. And again, I recommend doing this via video. And the transition message, the whole idea behind this is to give people fair warning and a heads up that you're going to start switching gears a little bit and start talking about business. And here's the counterintuitive part. I'm also going to, in this transition video, encourage people to opt out if they'd rather not hear about it. Now, that's something that's kind of seems counterintuitive, but is very, very powerful. So I'll just give an example of how that might sound. So, hey, it's Dave again. It's been really good reconnecting with you over the last week or so. And if you haven't had a chance to get back to me, just hit reply. Let me know how you're doing. I'd love to hear back from you. And I also want to give you the heads up that moving ahead, I want to do a better job of keeping in touch with you and letting you know what I'm up to with my real estate investing and real estate investments. In fact, I am very, very passionate about real estate. I think this is the best way for average people to make an above average return on their money backed by a solid asset, and that's real property. So moving ahead, I'm going to be letting you know a little bit about what I'm doing with that. And who knows, maybe sometime in the future, you might even be interested in partnering up with me and sharing in the profits. But you know what? If you're really not interested in real estate, that's okay too. You can always click on the unsubscribe button at the bottom of any of my emails and you won't hear anything more about it. And no hard feelings either. Okay, hope you're doing well. Look forward to keeping in touch with you. And again, if you haven't got back to me yet, just click reply. Let me know how you're doing. I'd really love to reconnect. Take care. All right, so that is the third message that goes out. And I like to do that via video again. I just find video to be so effective. And then that really is just kind of the heads up to people that you're going to be changing things a little bit. You're going to be talking about real estate. And if you'd rather not hear about it, that's okay. They can opt themselves out.
That's awesome. So then what do you do with the ones that are still opting in?
Well, you'll be surprised at how few people actually opt out. So that's the good news. So what do you do with it after that? So now it's very important. So we were talking about network marketers being infamous for being flash in the pans, right?
Right.
So Sarah, my opinion is in order for anybody to invest with us, if we're going to ask somebody to invest $40, $50, $100,000 with us in a deal, they need to know us, they need to like us, and they need to trust us. Would you agree?
Absolutely. Those are the three things. Yeah.
Most definitely. So the nice thing about working with people in your sphere of influence is we've got two out of those three things taken care of. They already know us, and theoretically, they already like us. Okay, don't put people on your list who don't like you. There's a little hint, right? If you hate each other's guts, keep them off your list. But they already like you, and they may trust you with certain things, but they probably don't trust you yet with their cash, right? So how do we create that trust factor? And one of the things that we can do is what I call constant and consistent communication, educational marketing over time. So I highly recommend that you set up a website specifically for communicating with your potential investors. Again, this isn't the kind of site that you're going to be putting out to the entire universe. You really just want to use it as a marketing hub that everything that you're doing kind of comes from and brings people back to it, brings those group of 200 or 300 people back to your website to find out more information. So what can you do with constant, consistent communication? Well, it really depends on what floats your boat the most. So if you're into videos, you could do a weekly or even a monthly video. Just have that come out on a consistent basis. You could be talking about real estate investing. You could be talking about different deals that you've done. Keep it fairly light. Most of the people that are on your list aren't really interested in learning all the nitty-gritty details about real estate. They aren't real estate weirdos like you and I. They're just kind of average people, right? So keep it light, keep it high level. But really, the whole idea is for them to see that you know what you're talking about. And not only that, for them to see over time that you're still doing this, that you're not just a flash in the pan, that you're serious about it. So that's the number one mistake I see almost everybody making, is they get off to a good start, maybe doing a warm-up campaign or something like that, a little bit of marketing, and then they fizzle. They might even raise some money for their deals, but then they fizzle out on keeping on with that constant and consistent communication. So that is really what you need to do. If you're more of a writer, well, then you can write blog posts, you can write a monthly electronic newsletter, all these kind of things to keep in touch and front of mind with your prospective investors.
So just out of curiosity, one of the objections that you might get is somebody saying, well, you know, I've got like not a whole lot of time to be doing all of this. And what kind of, I mean, obviously they probably don't want it enough, but what things can they do to be able to make it as easy as possible to do these things that you're telling us about?
You're absolutely right. So the best thing to do is to pick one thing and do it consistently, and also to do things in batches. So for example, let's say you decide you want to do videos. When I'm working with my VIP one-on-one clients, we crank out a year's worth of video logs in about an hour and a half to 2 hours.
Okay.
We do 13 video logs all at one time. And that way, they don't have to think about that for a whole year. So if you're doing this on your own, you want to do video logs, then perhaps brainstorm some topics that kind of have the same theme. So for example, you might talk about the different profit centers in real estate investing. So depending on how you count them, there are up to 8 different profit centers in real estate. You could do one video log on each one of those profit centers, and then there you go. If you're sending those out once a month, you've got 8 months worth of content right off the get-go, and you can set it and forget it. You don't have to come back and do it every single month. Is that helpful?
Absolutely. So this is something that a newbie can also do as somebody that's more experienced, you think?
Oh, for sure. Yeah, anybody can do this. It's just getting your head around what you need to do. And these don't have to be Hollywood quality videos by any stretch of the imagination. In fact, quite often it's better if they're done on your selfie mode on your cell phone, right? I mean, you and I both know a lot of very astute investors who kind of do walking tours of the properties that they're working on, and they've just got their cell phone and they're doing a selfie, and it looks like a selfie, but that's perfectly fine. I mean, that's what people are kind of accustomed to with YouTube, and it just seems a lot more real. So don't worry about spending lots of money on equipment or hiring professional videographers or anything like that. This is definitely stuff that you can do from your laptop or your cell phone or your tablet, whatever you prefer.
Okay, great. So then the ones that are actually interested and want to talk to us more or learn more about us and potentially meet with us, like how do you handle those ones?
Oh, that's great. Yeah. So basically at the end of each one of those communications, there should be some sort of a call to action. So something like, hey, you know what? If you're interested in finding out more about the kind of deals that I'm doing and perhaps even sharing in the profits with me, give me a call at 1-2-3-4-5-6-7-8-9, and we'll get together and I'll show you what it's all about. Okay, so everything should have a call to action, telling them very, very clearly what to do next. And then when you get somebody who puts up their hand and says, yeah, you know what, Dave, I'm interested, I highly recommend that you do a visual presentation one-on-one with that person. In other words, avoid trying to explain your deal over the phone. And there's a couple of reasons for that, Sarah. First reason is there's a good chance you're going to forget a bunch of stuff if you're trying to just talk about it over the phone. Second of all, there's no way in heck the other person's going to remember everything that you're talking about when you just explain it over the phone. And third of all, it's just so much more effective if you can meet with them eyeball to eyeball so that you can see their reactions, their nonverbal cues, their body language as you're going through your presentation so that you can get clarification and help them out where they might be stumped. Does that make sense?
Yeah, absolutely. One of the tips that I remember you mentioning is if they have a significant other or a spouse, husband or wife, that they should be there also. Why is that so important?
Well, that's very important. And ask me how I learned this the hard way a couple of times. Here's the challenge. Typically, if you're meeting with the guy, the gentleman, and you show them the opportunity and they're really, really interested and they're keen to go, but the wife isn't there, and they run home and they try to explain your deal to their spouse, first of all, between the time they get in the car and the time they get home, they're going to forget 80% of what you showed them. And then the other 20%, they're going to screw up. They're going to be basically kind of like blathering idiots when they get home to their wife saying, hey, baby, saw this great deal with my old college buddy, Dave. He's doing some real estate stuff, really cool with apartment buildings. I think we should get involved. And then his wife's going to say, Dave, you mean that guy you used to go drinking with back in university? Yeah. He's doing really cool stuff with real estate. So automatically, if she hasn't seen the presentation, her hackles are going to be up. Her defenses are going to be on overdrive. And there's a good chance she's just going to kibosh the idea. She's going to be negative about the idea right off the get-go because she knows all the dumb stuff her husband's tried in the past that hasn't worked, right? Mm-hmm. So she thinks this might just be another harebrained scheme because you haven't had the opportunity to explain it to her properly and answer her questions and objections. So very, very important. If you're meeting with a husband or a wife, make sure the spouse is there too. Make sure all of the people that would be involved in this kind of decision are there to see the presentation, because otherwise you're setting yourself up for disaster.
Yeah, absolutely. I remember you mentioned a few other tips like getting their coffee order beforehand and a couple other things. Can you share some tips for the meeting with the audience?
Yeah, so first thing, just big picture, I highly recommend that you put together a little PowerPoint presentation to show people your opportunity. And the reason a PowerPoint works so much better than trying to wing it or jot it down on a napkin or a yellow legal pad or anything other of these other things that you hear about is that a PowerPoint lets you keep on track, lets you make sure that you remember everything that you need to cover, and it's much more interesting for the other person to watch as well versus just kind of listening to you. Okay, so a PowerPoint is very, very important. So the other tips are, make sure that you meet with all decision makers. I highly recommend that if you can, that you try to meet either on your turf or on neutral turf. So what I mean by that, if you have a little office or an office space that you can use, that's ideal. If that's not possible, then perhaps someplace like Starbucks or Tim Hortons would be quite good as well, as long as you can kind of find a quiet corner for that. Mm-hmm. And if you're going to be meeting for coffee, I highly recommend that you show up 10 or 15 minutes early, especially at Starbucks, either one, and order everybody's coffees for them. So in other words, when you're on the phone with your prospective investor and you decide that you're going to meet at Starbucks, get their coffee order ahead of time so that you can be prepared. So you get to Starbucks early, you pick up everybody's coffee, you've got your booth set up, you've got your computer set up, and when they get there, you can get right to it instead of having those awkward moments of waiting for 10 minutes in line for coffee and trying to make idle chit chat and that sort of thing.
Okay, that's really good. So now I have a question about the PowerPoint. How do we do PowerPoint? So like if somebody is not very tech savvy or hasn't really done many PowerPoints, like where do they even start?
Well, that's the beautiful thing about today's world, Sarah. If you can't do it, somebody else can, and chances are they can do it way better than you could trying to figure it out on your own. It's probably not all that expensive. So big thing is to come up with your outline for your PowerPoint. If you don't know how to put it together, find somebody on Fiverr or Upwork or something like that, or your 13-year-old kid or someone, and pay them a few bucks to do it for you. Okay, it's really not that tough. But what you really need to focus on is the content. So what I suggest for that is you always start off with the big picture of what's in it for the other person. Try and get them excited about your opportunity. So kind of go over the big picture, why this is such a great thing for your investor partners. A big mistake I see a lot of people doing with their presentations is they make it all around themselves, how great they are, how much experience they have, how many deals they've got under their belts, what kind of return on investment they're getting them for themselves, that kind of stuff, which is good, that's important, but really you always have to remember the other person only really gives a crap about what's in it for them. So we always got to be coming back to that. How does that relate to a big benefit for your prospective investor? So that's what I like to start off with, kind of like the big benefits. Then before I even get into the presentation, I usually have some questions that I ask them about their current state of investing, what they've been doing, how they feel about the returns they're getting, what they're looking for, what their risk tolerance levels are, that kind of thing. And then we start with the actual presentation itself. And then it can be kind of as simple or as complex as you want it to be. I think the simpler, the better. So you tell them a little bit about yourself, your background, right? Mm-hmm. And then you want to talk a little bit about your team. I don't want to spend very much time on there, but I want to show the other person that I'm not doing this all by myself, that I've got a power team that's working with me. If we're doing any kind of real estate investing, we all have a power team. It could be your realtor, could be your finance specialist, could be your property inspector, could be your property management company, could be your handyman service, could be your accountant. All these different people play an important role in your success as an investor. So I like to just show people very, very briefly, literally just taking 30, 40 seconds on this, who my team is and what kind of experience they have. Okay?
Yep, sounds
Any
good.
questions?
Sounds good.
Yeah, and then the next thing you want to talk about, or I suggest, is I talk about the market that I'm investing in, why this is such a good market to be buying in, why it makes sense on the fundamentals. So just because I live in a particular market does not make that an exceptionally good market as an investment market, right? So you have to justify why you're investing where you're investing. After that, I like to talk about the particular investment strategy that I focus on the most. And there's another big mistake I see people making is, a lot of us have experience doing a variety of different real estate investing strategies. And some people actually do several strategies at the same time. There's nothing wrong with that. However, when it comes to raising capital, what we're really trying to do with this presentation is get people to say, yes, I'm interested. We're not going to get them to give us a check today. We're just going to really get the ball rolling. And I suggest that you focus on your number one strategy, the one that you do the most, and then just focus on that. The reason is we've all heard the expression, jack of all trades, master of none, right?
Yep, I've heard that too.
Yeah, so we want to focus on that one strategy, why it makes so much sense, what the big benefits are, why it makes sense in the market that we're investing in. All right?
Got it.
After that, we can take a quick little look at our track record with that particular strategy. So go over a few of your past deals if you have deals already under your belt. If you're just getting started, that's okay too. I recommend that you borrow some deals, either from a mentor or somebody that's part of the same real estate investment club as you are, with their permission. So you want to use one of their deals as a case study. And then you use that as an example of the kind of deals that you're going to be doing. You don't claim that it's your deal. You say, these are the kind of deals that we're going to be doing. Make sense?
Yeah, I think it's really good that you said too, like you're not necessarily pitching them a deal. You're looking at getting the agreements that if something does come about, you're getting everything set up so that they're going to be on board. So it is really smart. And I think it's a very different thing versus, maybe what you did in the past, or what a lot of people are still doing is they've got a deal and then all of a sudden they're scrambling and putting the presentation on that deal, versus getting the investor to agree that this idea of investing in this market, in this strategy with you as an example, is something that they're interested in. So I think it is smart. So they're not really committing to putting the money right then and there.
Yeah, that's a big challenge I see a lot of people have. They say, well, Dave, when should I be doing these? When should I be raising capital? When I've got a deal on the go, or when I don't have a deal on the go? And my opinion is you raise the money, or you get the interest in investing before you've got the deal. So the money comes first, in my opinion. Now, if you do have a deal on the go, this would be the time in the presentation when you could talk about that particular deal, or a sample deal, an example of the kind of deal that you're going to be doing, right? And the kind of returns and what the numbers look like and all that kind of stuff. I do like to have some examples in the PowerPoint presentation of the kind of deal that you're going to be raising capital for, whether you've got one on the go right at the moment, or the kind of deal that you're going to be doing as soon as possible.
Okay, that makes sense. Now, what kind of objections are you getting in these meetings from the husband or the wife, or, if they're single, that person?
Well, you know what? I don't get very many objections, Sarah, because one of the things that I like to do that's a little bit counterintuitive is I like to be very, very upfront about what the downfalls and the risks are of investing. So I don't try to whitewash that. I don't try to hide it. I address the elephant that's in the room right up front. So one of my favorite things that I put up there is, a potential objection, or one of the frequently asked questions is, well, Dave, what happens if you get hit by a bus or develop a crack cocaine habit and move out of town? So, I mean, basically, because we got to look at what's the other person, what are the big objections that might be in their mind? What are the big concerns that are going to be in their mind? And instead of trying to avoid them, just hit them straight on, right? So I show them exactly what the risks are, as well as how I do my best to mitigate those risks. But I never, ever tell anybody, I never make any promises about specific returns. I show people what our targets are, and I never make any promises that this is going to be an absolutely smooth ride, because rarely does anything go perfectly according to plan. And I think you can probably attest to that because you've been around real estate for quite a while already yourself.
Yep, surprises always come up.
Exactly. So better that they're aware of what could happen in the first place rather than getting blindsided. So I have very, very few objections that come up. The only, the big one that kind of comes up is, well, Dave, it sounds kind of interesting. I think we want to think about it, right? Or we might be interested down the road. Keep us in mind, blah, blah, blah. And I really hate that answer. At the end of a presentation, I want people to tell me either, yeah, Dave, you know what? When you get an investment going, when you get a deal going, I really want to hear about it. I am interested in investing. Or, you know what, Dave, this isn't right for me. I'd rather not. Thanks anyhow.
Yeah, that's the worst objection. I mean, I'm in sales and for my actual job as well, and I would rather hear yes or no, and I have to think about it, is just a no that's coming, and it's going to take just time and effort to get it out. And your time is so valuable. It's just a waste of my time when I hear that, and a waste of everyone's time. So
you want a hint on how to avoid that?
Yes.
Okay, perfect. So right at the beginning, here's what I do with my presentation. Right at the beginning of the presentation, let's pretend you're my prospective investor. And I'd say, we've got the coffees. And then what I like to do is I like to level the playing field, because I don't want the investor coming in and thinking they've got all the power because they've got the money and I need the money, right? Mm-hmm. So the first thing I want to do is level the playing field. Hey, Sarah, it's great to see you. Thanks for coming out. Here's your coffee with 18 sugars and 12 creams, just like you asked for. All right. And Sarah, I appreciate you coming out. I know you're a busy person. I'm a busy person too. In fact, I've got another appointment in about 40 minutes. So if it's okay with you, how about if we just get down to it and I'll show you what I've got? Does that make sense?
Yes, it does.
Okay, so there we go. That's what I call leveling the playing field. So now I've shown you respect, but I've given myself respect as well. And I recognize that you're busy, but I show that I might even be a little bit busier than you are because I got something else right after this. And then it also really helps to keep the meeting tight and on schedule. We don't get off on tangents and start meandering around. Okay. So then the next thing I want to do is I want to peg you down so that you're going to give me a solid answer at the end of the presentation. Now, again, I'm not trying to get you to sign me a check. I just want to know if you're a serious player or not. And if I do have a deal on the go, I should bother telling you about it. Does that make sense?
It sure does.
All right. So here's how I would say that. So, Sarah, at the end of the presentation, typically one of two things is going to happen. Either I'm going to show you what everything's about and it looks really good to you and you're interested in seeing what the next steps are. Now, Sarah, I'm not going to be asking you to cut me a check or anything like that today, but you'd like to see what the next steps are in the process. Or I'm going to go through the process, the presentation today, and show you everything I've got. And at the end of it, you're going to say, you know what, this isn't really for me, for whatever reason. So, Sarah, are you comfortable telling me at the end of our time together whether you're interested or not in these kind of deals?
Yes.
Okay, very good. So that's what we call an upfront commitment. You've committed that you're going to give me a solid answer, not necessarily invest with me. I would never ask you to, commit to investing $100,000 with me just like that. But you're letting me know that you're comfortable saying no to me. That's the most important thing, right? Because like you say, most maybes are just a polite no that gets dragged out forever. Yeah, there you go. Well, I'm glad that's helpful.
Yeah, I mean, that could solve a lot of sales people's dilemma in anything, right? I mean, whether it's as an investor, which is completely different, but if you're a salesperson on the road and you're driving and you're listening to this podcast, you should be doing this with all of your prospects, regardless of what the industry is. It'll help a lot.
Definitely. I'd like to take credit for that, but I think I learned that. I think that was Sandler training, if I'm not mistaken.
Oh, very good. So do you ever get any no's, or most people pretty open to saying yes to that one?
Yeah, I've never had anybody say no.
Okay,
Right?
so after you go through your whole presentation, and so how often do you still get that, you know what, I got to let you know, or I got to think about it? Like, how often do you still get those with that?
Well, you're still, because they forget, right?
Mm-hmm.
So let's just play that out, shall we?
Sure.
So let's pretend we've just gone through the whole presentation and say, all right, Sarah, so that's what it's all about. What are your thoughts? Is this something you might be interested in?
Well, Dave, I need a little bit of time to think about it, and why don't I get back to you in a bit?
All right, fair enough. Now, again, remember, Sarah, at the beginning of the conversation, I said at the end, one of two things is going to happen. Either you're going to be interested in seeing what the next steps are. And again, I'm not going to ask you to cut me a check today. It's just to see what's next and perhaps get the ball rolling. Or you're going to tell me that this is not a good fit for you at this time for any reason. And that's perfectly fine either. So which one is it? Is this really not a good fit for you at this time?
Yeah, I think you're right. I don't think it's a really good fit at this time, so it's just not something that I'm ready to do.
Perfect. Okay, good. Now I got a solid answer from you. I mean, everybody's so freaked out about getting no's. No's are just fine because no just means not now.
Right.
And here's the good news. We've done this whole presentation, Sarah. Now you know what the heck I'm up to.
Mm-hmm.
Now you've got a good idea of what's involved. So the next time you get your mutual fund statement and you see how much money you're not making with mutual funds or with stocks or with bonds or wherever the heck you've got your money and you're sick and tired of it, I may come to mind as another option. So even though he's told me no today, doesn't mean, I'll say, to heck with Sarah, I'm never talking to you again. No.
Right.
We'll still be friends. I'll still keep you on my contact list. And who knows, maybe 6 months, 12 months, 2 years from now, time and circumstances might change your mind. Or you might know somebody who could be interested in this kind of deal.
Yeah, so how often do you get referrals?
Well, it depends on how proactive I am about referrals. So referrals are huge, but I think people are just generally way too lackadaisical about getting them. So I highly recommend that you proactively ask for referrals nicely after positive experiences. This could actually be an example. So let's say we just went through this whole presentation. Let's say you said, no, you're not interested. Well, I might say, well, thank you very much for letting me know. I appreciate that, Sarah. Now, do you know anybody else who this might make sense for?
Well, maybe my cousin. I can reach out to him and ask him if he might be interested.
Okay, perfect. So there we go. We've got a potential referral there. And quite often you'd probably say, no, I can't know. Nobody comes to mind right now, but who knows? We've planted the seed there. Does that make
Right.
sense?
Yes, it
So
does.
how often you get referrals depends on how often you ask for them and how you ask for them.
Okay, perfect. So, any other tips or anything else that we should know about that whole process?
Oh, gee, well,
I guess you can
I
go on
spend,
forever, but
yeah, I spend 3 solid days talking about this kind of stuff at boot camps. I've got a full-on home study program and a book on all this kind of stuff. So I just want to kind of give you some highlights today that you can actually put to use sooner rather than later to get things going. So is there anything specific that you'd like to talk about as far as tips?
so any one big mistake that you're seeing a lot of investors making over and over that you just kind of wish that you would be able to tell them?
You know what? The biggest mistake I see people making, it's kind of heartbreaking, is they get stuck and they get stalled out after 2 or 3 deals. They run out of cash and or credit to buy more properties. They get completely freaked out at the idea of asking other people to invest with them. They don't know how to go about it. They screw up like I did. They might take a little bit of a jab at it. They get turned down a few times, and we're all so sensitive that we tend to quit after we've been shut down a few times like that. That's the biggest mistake I see people making, is just not working through that, not coming up with a solution to that so they can break through and get back on track with their real estate investing goals. Because we all start out with the idea of investing to build up a portfolio, to create passive income, to create significant net worth, to create that financial freedom we all desire, to be able to, quit our job if we don't like it, all that kind of good stuff. But quite frankly, with 1 or 2 properties, you're probably not going to be able to do that. You need to have a bigger portfolio. And if you're stuck because you run out of money and or credit to do that, that's just a tragedy.
Yeah, absolutely. So, Dave, you've got an upcoming boot camp in June. Can you tell us more about it?
Yeah, I've got what I've called my massive implementation boot camp. It's coming up in Burlington, Ontario, right near where you are.
Yeah.
And it's going to be June 8th, 9th, and 10th. And what we're going to do here, Sarah, it's kind of different. We're going to, instead of it be a seminar kind of experience, this is definitely an implementation boot camp. We're going to have a maximum of 25 people there. And the whole goal of this boot camp is to create what I call your $1 million investor presentation. So we're going to start from scratch. And at the end of those 3 days, you're going to walk out of that boot camp with your presentation created, practiced, role played, and perfected right there at the boot camp. I'm not going to teach you how to do a million different things. We're going to focus on that one big thing, because you can do everything else right, but if you meet with somebody and you have a crappy presentation, it's all for naught, right? So that's the whole idea. Put together your presentation, role play how to do this presentation one-on-one with people, face-to-face, how to do it online if the other person's across the country or across the province or you can't meet face-to-face, how to do group presentations, webinars. This has been an absolute game changer for myself and my most successful students and clients, is doing group presentations online. So we're going to walk through exactly how to do all of that with this brand new presentation that you will have put together at the workshop with my help and with practicing and perfecting it with everybody else. So that's what it's all about.
So, how would somebody find out where in the details and the exact time and the exact address? Like, how do we find out more about that?
Well, I'm pleased to say you're coming, so you already know, so that's great.
I know, but so I can actually just add it in the show notes if you want, but I don't know if there's like a website or anything that they can sign up
There is,
for.
yes. Yeah, there is. So it's 2018.investorattractionworkshop.com. 2018.investorattractionworkshop.com. You can go there. You can check out all the information about what's included with the program, the price. And at this time that we're talking, we've already got 20 of the 25 spots taken up. So there may or may not be spots available when people check the website.
Okay. All right. Perfect. Thanks for sharing. So the last part of this podcast is called the lightning round, where I will ask you a series of 5 questions and you're going to give me the first answer that comes to your mind. You ready?
Lightning round sounds kind of shocking.
Question number 1. What is your favorite real estate investing book ever?
Well, kind of boring, but it's got to be Rich Dad, Poor Dad, I think, even though I read a lot of other books before that, but that's the one that just kind of really sparked myself and so many other people as well.
Okay. Question number 2, your favorite podcast?
It's a marketing podcast put on by a fellow Canadian named Dean Jackson, and it's called More Cheese, Less Whiskers.
Never heard of it. Interesting. Question number 3. What is your favorite pastime? What do you do for fun when you're not doing real estate?
Oh, well, I like to travel. I like to read. If I'm feeling energetic in the wintertime, I like to ski as well. And I'm recently married, so I enjoy spending time with my lovely wife, Max.
Excellent. And question number 4. If you lost all your money and all your assets tomorrow, how would you start again?
Do I get to keep my contacts?
You do, and your knowledge and I guess your past experience.
Okay, well, I would get back into real estate investing, and I would shortcut it by getting investor partners on board from the get-go. So I'd probably start off with single-family homes with some basement suites. Well, if I had my past experience, I'd jump right into apartment buildings again. So what am I fooling around there for? So there you go. Just raise capital and go buy an apartment building.
Okay. And last question, number 5. If somebody has $50,000 and they want to get started, how would you recommend that they spend it?
Ooh, that's a good question. Well, first of all, I would suggest they don't spend it. I would suggest that they invest it. And there's a couple of things that they can do. I would highly recommend that they attend. So you're talking about somebody who just has no clue, right? They're just starting from scratch.
Yeah.
Highly recommend they go to a group like yours, so a real estate investment club in their area, and mix and mingle with the people that are at the club and get an idea of the kind of strategy that they want to focus on. Because real estate investing can be really, really overwhelming. There's so many different facets and strategies and tactics, but figure out what you want to accomplish and what is the best strategy to use to do that. So once you've kind of figured out the direction you want to go, then you got a choice. You can either pay to get educated financially, or you can work for free and work with somebody who's already doing it, be their go-to person, be their Joe boy or Joe girl or whatever you want to call it, and help them out in exchange for learning, right? And in exchange for experience and perhaps a little part of the deal. That's basically what I would recommend people do. That's how I see people having the most success. Either getting educated in a specific area that you want to learn more about with somebody who is worth learning from. So again, that's another great reason to attend a real estate investment club. You can ask different people about their experience with different education, and or find somebody there who's doing what you want to do and partner up with them, work for free in exchange for that education.
Excellent advice. So where can listeners find you if they'd like to reach out to you or know more about you?
Well, my website is davedubeau.com. That's DAVEDUBEAU.com. They can go there. They can take a look around the site. I think I've got some free goodies there if they want to opt in to get one of my ebooks. That's great. If they'd like to book a one-on-one strategy session with me, that's an option as well. And that way we can get together and really go in depth over what their goals are, what their obstacles are, come up with a cunning plan for attracting investors and raising capital for them so that they can accomplish their real estate goals much, much faster.
Excellent. And any last words of advice or anything else that you'd like to let the listeners know that we haven't covered yet?
You know what, Sarah? I think really do firmly believe that real estate investing is the best way for average people to make a much higher than average return on their money and their time. So a lot of people are shy about letting their friends, their family, their associates, their sphere of influence know that they're real estate investors. I really think it's almost like a patriotic duty for us to educate people about the huge benefits of real estate investing as an investment class and show them how they can partner up with us and skip basically all the hard work, because we're going to do that for them, and just share in the rewards, right? So instead of being shy about what you're doing with real estate investing, be loud, be proud about it, and educate people about it. Allow them to make an educated decision as to whether or not they'd like to invest with you. And when you do that, that's a way that you can raise capital without pressure, without manipulation, and being able to sleep well at night.
Really awesome advice. Thank you so much, Dave, for your time today and providing so many great tips, insights on how to raise money. I really, truly believe it is the one barrier, the largest barrier anyways, for investors that are starting out or wanting to scale up to get to that next level. So thanks so much for those insights. Really, really appreciate it.
My pleasure, Sarah, and thank you very much for everything that you do, especially with your podcast. That's definitely giving back a lot to the community, so thank you.
Excellent. Well, Dave, I will see you then at the boot camp on June 8th, 9th, and 10th. And until then, thanks very much.
I can't wait. Take care. Talk to you soon.
Bye.
Bye-bye.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larby. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?